This is a topic related to ratio analysis based on the financial statements. That is what the record I have taken for analyzing the financial statements for the 1 year. That is the year 2022. We can easily go through that equity share capital, late preference share capital, reserves and surpluses, 9% debentures, current liabilities, land and building. Coming to the asset side, land and buildings, plant and machinery, closing stock, debtors, bank, and cash balances, prepaid expenses. What we are going to get to know with the help of the financial statement is we can easily know that what is the current ratio of the companies, what may be the quick ratio. Quick ratio means how I can be current assets can be easily converted as a cash. That assets we will call it as a take it into consideration to calculate the quick ratios. Based on the debt equity ratios, we are going to get to know what is the total percentage of debt in the company and what is the percentage of equity in the companies. And let me talk about the net worth ratios. Okay, let me talk about the net worth ratios means what is the total owners has invested into the business, that we will get to know with the help of the net worth ratios. It is also called as proprietary ratio also, and current ratios we will also call it as ideal ratios also we will call it as. What is the basic standards? See, based on the statements, I have calculated the current ratios. In order to calculate the current ratios, I have taken the total current assets, that is supposed to be closing stock, debtors, bank and cash and prepaid expenses over by, means divided by the current liabilities. And let me talk about the quick ratios. Quick ratios we are going to take into consideration. The items are, see here now we can see, except closing stock, remaining assets means current assets we will take into consideration to calculate the quick ratios. And usually the current ratios percentage will be more than 2. It is going to 1.5 is to asset supposed to be 2 is to 1, means asset total current assets will be 2 and the current liabilities will be 1, like that. But according to this company performance, it is to be total current assets will be 1.5 is to 1. Let me talk about the net worth ratio. Total nearly 56% of the funds supposed to be invested to the companies by the investors or the shareholders or the proprietors of the companies. Next we are talking about the gross profit. Each and every business we are going to talk about their financial performances with the help of the gross profit and the net profits. Okay, these segregations we are going to calculate. Here they have given us some additional information here. Sales they have given, cost of goods sold, other expenses, profit and loss on sale of any fixed assets they have given here. What all this comes, some commission earned is the income they have given here. So in order to calculate, I have made a chart here to how to calculate the gross profit based on that. The gross profit percentage of the companies in the year 2022 of ABC is 25%, and a net profit ratio of the company is 15%. In this, how we are going to calculate the net profit is supposed to be based on the gross profit we calculated in the above cell. We are going to minus, means add the profits on sale of any assets. Okay, and commission, any incomes we are going to receive, that we have to add, it has to be into the companies, and any expenses or loss on sale of any assets we are going to minus from the gross profit. Finally we are going to get a net profit. Based on these simple and the basic ratios, we are going to make a chart here. This is what the percentage. I am going to use the pie chart because I am going to analyze the financial statement of the companies based on the single year. So in case of, if I'll go for a further sessions and all, if I'm going to make a videos regarding number of years of a same companies, I have to use the bar diagrams for understanding purposes. These are all the, this formulas is the basis for the calculation of the ratios that I used in this particular problem. And this is separation split have made, separation sheet I have made for how we have to calculate the net profit, gross profits and all. This is about how I have calculated the owner's fund or the total equity of the company's. Equity means whatever the shares the company is going to issues, that we are going to calculate in this. This is whole about why financial statement is important. Means each and every person, if I am the business person, if I want to invest, if I would just want to be a investing person, means how I have to invest based on the diagrams. I don't want to go through the lengthy explanations of the or financial statement of the company. With the help of this financial statement analysis, with the help of this pie chart or the bar diagrams, we can easily get to know what is the financial position, what is the solvency, what is the net worth position of the companies. And one more thing, very important, when we are going to give credit to the companies in the form of loans, anything, the debt equity ratios that is to be standard is debt supposed to be 1 and equity supposed to be 2. Then only the investor is having a guarantee, I can give a debt, I can repay it back to me. These are all the basic information we have to go through before analyzing the financial statements. Once we analyze, we have to give our conclusions based on the ratios we have get it out from the financial statements.